So we are at the biggest week when it comes to earnings, and I actually want to take a look at two companies that are actually going to have earnings today, as if you guys are seeing this. Now, one of them is one that you guys have seen me talk here a lot on the channel, and I would just like to pat myself in the back there a little bit because it has rebounded to such a degree that, oh my goodness, hopefully everybody got in when, well, it was much lower. So we're going to talk about that one first, and then we're going to take a look at another one that we really don't talk a lot here on the channel. Now, as you guys see right over here, a lot of earnings, right? A lot of earnings. Today was Monday. We didn't really have much of anything. I guess waste management is one that I really like. However, tomorrow/today, as if you guys are seeing this, we got a lot of them here. Visa, we got Electronic EA, right? Which just got bought out. DR Horton. However, the two that I really would like to pay attention to, it is, of course, my baby, UNH, because this one has gone for a wild ride this year, and PayPal, which, if I'm not mistaken, I think some of you guys may have asked for this one in the past. So we're going to take a look at those two, starting, of course, with United Health. We're going to go through this one really quickly. We've done a lot of videos on this one. You guys know my opinion. I'm going to give you guys a quick synopsis on that. But all in all, though, when it comes to UNH, guys, I mean, I have said this several times. The fact that they were going through a lot of stuff. I mean, last year they had I believe it was a hack, knocked down basically a bunch of stuff. If you look at their net income last year, it just dropped massively, right? However, this year we did get this. Was it this year? Or was it last year? I'm getting my years confused. I believe it was this year. They had the DOJ probe, and it was just a whole thing. I believe it was the Wall Street Journal came up with this thing being like, oh, they're getting investigated, and it turned out to be, at least it's turning out to be, nothing. In fact, currently we can see here that, well, United Health faces critical tests with Q3 earnings set to reveal recovery progress. So nothing here screams that the probe is doing anything. It really is. In fact, I tried to look it up. I don't believe there's been any news as per the probe, like any new, breaking news as per the probe. So we got UNH will report its third quarter results today, Tuesday. You guys are seeing this. October 28th, before the market opens, analysts expect at around $2.81 per share, down 60.7% year over year, which is massive, on revenue of $113.06 billion, or up about 12.2%. The company has beaten both EPS and revenue estimates 75% of the time over the past 2 years, but sentiment heading into the quarter remains cautious. However, sentiment heading into the quarter appears cautious in the past 3 months. Analysts have issued 22 downward revisions in their earnings per share and 11 downward revenue revisions, compared to 0 upward revisions on the bottom line and only 7 upward revisions on the top line. Investors will focus on management commentary around medical cost trends, Optum growth, and forward guidance. U.S. health insurers, including UNH, have been pressured by rising healthcare utilization and muted Medicare Advantage rate hikes. So let's actually take a look at this a little bit further, because they do go into this in that article. The fact that, I mean, these earnings aren't looking good. 22 revisions, all of them to the downside. $2.81 for EPS normalized estimate, and gap of $2.40 on a revenue estimate of 113.06. So we'll see. I mean, at the end of the day, it really just comes down to guidance. They could miss on all of them, but guidance, I mean, they could just come up being like, no, we're actually looking really good right now. Like, everything's looking really solid. The probe, they'll probably mention stuff about the probe. They'll probably be like, yeah, the probe really hasn't had much of an impact, or, something along those lines. So it could bring the stock up even higher than what it currently is. In fact, if you guys were watching this channel, right? If you guys were watching the channel, y'all know that I was screaming, oh my goodness, this thing is looking like an absolute buy. I was looking at the fundamentals when this thing was crashing, and I said, guys, I don't know about y'all, but this is still looking like an amazing company. It really has, it didn't have any issues fundamentally, right? And, well, right now we're kind of starting to see that small rebound, because we can see over here, as of 10/27, and even post-market, Guys, we're almost up to $400 again. Look at this. We're almost up to $400 again. Absolutely crazy. I saw this a few weeks ago thinking that was still like around 300. We're almost at 400, which is honestly kind of depressing. I really wish this would have stayed 300 or so, a little bit longer for a few more months, but it is what it is. We can see that even though with this massive jump closing the $400 mark, on the 1 year, this thing is still down 35.25%. In fact, if we take a look at this when it actually fell on April 11th, it was at around $599.47, dropping to a low of $237.77. And overall, in the 52-week range, we could see that $235 on the low end, $630 on the high end. So even if this thing were to just slowly climb up, honestly, we're still decently low as per the 52-week range on the high end. Now, on the year to date, we can see that this thing is still down 27.65%. So there's still ample amount of opportunity to buy this company at a really, really cheap rate in general. Now, if we take a look at the overall sentiment when it comes to Wall Street and Seeking Alpha, guys, they're very, very, very close, right? They're very, very close. 45 authors as per Seeking Alpha, 15 saying strong buy, 23 saying buy, 4 saying a hold, and 3 saying a sell. No strong sells here, all for an overall buy rating of 4.11. Now, if we take a look at Wall Street, we can see something similar. 27 analysts, so a little bit less, but 14 saying a strong buy, 5 saying a buy, 6 saying a hold, 0 saying a sell, 2 saying a strong sell, for an overall buy rating, once again, of 4.07. So both are basically saying that this thing is still looking like an absolute buy, even at the current stages. This could change tomorrow, but in general, still looking really, really good. Now, when it comes to my discounted free cash flow, I really just want to take a look at this because we know what their fundamentals look like, guys. I mean, they're amazing. They really, really are. So I'm not really going to go into them too much, but I do want to show you guys the discounted free cash flow to see where in the world this actually lands. Now, right off the bat, we can see that, not inputting anything, the base value of the company with no projections into the future, $289.51. Guys, where was this company just a few months ago, right? Where was this company just a few months ago? Oh, that is correct. We hit around there. In fact, we went a little bit lower, 237, but we were basically at around that $289, $290, $300 for a decent amount of time. You got over here, May 14th, practically all the way up to, I would say, September, right? The beginning of September. So yeah, ample amount of time, ample amount of time. So I'm going to now put in the assumptions, and I'm going to show you guys exactly what price you should pay for this company based as per these future revisions. So here we have my assumptions when it comes to UNH. Average revenue to free cash flow growth is looking like it is at 6.2. Average net income growth 23.5, and average share change, they've been buying back at around 0.87%. So for my assumptions, I'm going to say 4, 6, and 8% for the free cash flow to revenue in the next 10 years, because I am looking at the next 10 years. Net income growth, I'm going to go a little bit lower, 15, 18, and 21. Okay, so the highest assumption, I'm going to say that it's going to be as close as to the average net income growth currently, and the lowest assumption just a little bit lower. PE of 15, 20, and 25. Then a share change of 0, 0.5%, and then 1% buyback. And lastly, for the discount rate, 9%, 8%, and 7%. And with this, we get the target share prices of $796.55 to a whopping $2,531. Now, full stop. A lot of you might be like, that's absolutely crazy. $2,000? What is this guy talking about? This stock is it's not even 400, and it crashed like it was horrible. Guys, this isn't looking at necessarily what the stock has done. This is looking at the fundamentals, and the fundamentals of this company are amazing. They really, really are. In fact, so let me actually show everybody just the profit metrics, because this is absolutely gorgeous. I mean, look at the net income. It was basically a straight linear graph when it came to the trend line up until 2024, and so far they're already upwards to $21.3 billion. So right then and there, we still have one more quarter left, and they already basically rebounded. And odds are they will probably reach this 22.4 billion. Guys, up 266% on the overall 10 years. Absolutely crazy. Then we got the free cash flow. I mean, if we take a look at this free cash flow graph right over here, we could clearly see that once again we see something similar. Crash as of 2024, but we basically rebounded really, really nicely. And the revenue, well, the revenue just looks fake. Now it does, up 169.13%. So yeah, the fundamentals are looking absolutely incredible, which is why the discounted free cash flow is saying that the stock should be worth around $2,500. I know it seems kind of crazy, but it actually does make sense when you think about it in retrospect of the fundamentals. Does this mean that the stock will reach that? Not necessarily. However, the fundamentals do kind of show it. And if you guys bought at that massive dip, man, you guys are doing absolutely great. So again, not financial advice. Every investment is the present value of all future cash flow. And with that said, let's move now into the second company that we haven't done here on the channel too much, at least not as much as UNH, and that is the company PayPal. Yeah, it's been quite a while since I've done this company, guys, but you know, it's been through a ringer as well. It really, really has. So let's just jump right into this, and we could see here that as of today, PayPal has actually gone up 0.69%. Post market 1.35%. So on this, we can see that it's actually been doing really good on the intraday. However, on the 1 year, we can see that it is down nearly 16%. On the year to date, it is down 17.69%. On the 52-week range, $55.85 to $93.66. So very, very interesting stock. Obviously, you guys know that it has had a lot of controversies, and people generally do not like PayPal for reasons, right? But at the end of the day, guys, when it comes to investing, you got to take a look at the numbers, right? You have to take a look at the numbers. So let's take a look at this. We can see that when it comes to Seeking Alpha versus Wall Street, both of them are putting it as a buy. Wall Street's a little bit more bearish on it. Seeking Alpha, 11 authors, 4 of them are saying strong buy, 6 of them are saying a buy, and 1 of them is saying a hold, for an overall buy rating of a whopping 4.27. They really like this. Now, Wall Street's a little bit more bearish, but they also have a lot more analysts, 44 to be exact. And we can see that 12 of them are saying strong buy, 6 of them are saying a buy, 23 are saying a hold, that's a lot, and 3 are saying a strong sell, for an overall buy rating of a little bit more than 3.5 points. So all in all, it is looking like a buy. It's leaning towards a buy when you combine them together, right? Leaning more to like a buy. Now, they do have earnings, as I just said, and they have earnings today, and they're basically split. It's actually hilarious how this is basically 50-50. We can see that their EPS normalized estimates of $1.20, EPS gap estimate of $1.14, and revenue estimate of $8.23 billion. Last 90-day revisions, 15 to the upside, 14 to the downside. So basically 50-50, right? Basically 50-50. It's going to be interesting to see how this actually moves when these earnings actually come out tomorrow/today for you guys. Now, if we take a look at my overall spreadsheet, we can see this company currently has a PE of 15.03. So I'm already liking this PE in general, guys. I really, really do. When it comes to the dividend, they don't pay the dividend, but price to free cash flow. Look at the current price to free cash flow, guys. 12.68. Average 10-year average price to free cash flow 29. So PE is looking good, right? The PE is looking like it's definitely undervalued. The price of free cash flow is looking amazing, right? You want the current price of free cash flow lower than the 10-year average, so it really is lower. Price of sales 2.08, and the net profit margins of 14.5%. I'm running up to 15, but yeah, 14.5%. Usually online companies like these don't really have a lot of overhead, right? So they're just like, yeah, we just make a ton of profits, right? We just make a ton of profits. So let's take a look at the overall fundamentals for this, because I think a lot of people would be fairly surprised. Again, no such thing as moral investing. We got net income of 2015 of $1.23 billion to today of a whopping $4.7 billion, increase of 281%. Excuse for any jumps that happened. Unfortunately, it is the Excel sheet. 281%, guys, absolutely massive. They did crash a little bit in 2022. I mean, obvious reason as to why interest rates went up, right? So all in all, it is looking really, really nice. When it comes to the free cash flow, it's going up, stagnant though, but it is in general going up, going from $1.8 billion in 2015 to today of $5.3 billion. Obviously, the trailing, this isn't over yet. Last year was $6.77 billion. This is an increase of 390%, as you guys can see right there. And average free cash flow is looking at $4.2 billion. Very, very nice. Now, when it comes to the revenue, this revenue absolutely looks fake. Look at this. Going from $9.25 billion in 2015 to today of $32.3 billion. That is an increase of 250%, guys. 250% on the 10-year. Absolutely incredible. The revenue looks absolutely fake. When it comes to the total assets, we can see that it is increasing, but kind of stagnating as of recently. Liabilities, we can see similar aspect. Average assets minus the average liabilities, we can see that it is stagnating right here. But all in all, average total assets of $60.5 billion, liabilities of $42.3 billion, a difference of $18 billion. Cash flow minus the liabilities, I mean, yeah, they're going to pack on a lot of liabilities because of the fact that they do want to try and innovate. They want to do the whole thing with AI now, right? So it's not really surprising. However, as of recently, they're in the negative $50 billion mark. Average is looking at, we could see right there, $38.1 billion. So yeah, not looking good when it comes to that, but it is expected. Now, the shares outstanding is looking perfect. It's looking perfect. I mean, this is a massive buyback, going from 1.2 billion shares in 2015 to today, guys, of 960 million shares. That is a whopping buyback of 21.6%. Absolutely crazy. And when it comes to the previous to the current year, is another buyback of 7.37%. Absolutely incredible. I mean, they are buying back shares like there's no tomorrow. Absolutely love it, especially now seeing that they recently, I mean, they're down massively. So I'm actually really glad that they are buying back shares today. Really, really nice to see. And lastly, cash and equivalents currently hold around $6.7 billion with an average of $5.5 billion. So let's just jump right into the calculator. And right off the bat, the base value, guys, is looking at $67.47. Current price $70.25. So we're practically there, right? Just on the base value, this thing will only go up, right? So right off the bat, we can see that the free cash flow to revenue growth 20.06, average net income growth 28, and average share buyback of 2.37%. So I'm going to give you guys these numbers in just 1 second. So let's see what price this is actually considered a good value based on future projections of PayPal. So now taking a look at what I put, guys, for the free cash flow to revenue growth 18, 20, and 22%. When it comes to the net income, 20, 22, and 24%. PE of 11, PE of 15 and 22. Share change of 2, 3, and 4%, buying back. And a discount rate of 11, 9, and 8%. And we got $258.68 right there to $465.37 on the median, and the high of $851 and a penny. Honestly, I look at this and I'm like, I believe that. I really, really do. Especially when taking a look at these fundamentals, not necessarily so much the free cash flow showing that kind of increase, but the net income is, as well as the revenue. And that share buyback is just perfection. It really, really is. So yeah, PayPal is looking amazing as well. Again, not financial advice. These calculator assumptions necessarily don't have to come true, right? They are just based off of these numbers. If you guys do a 5-year one, which is the one that I have available for all of you guys to use down in the description below, that one will give you something completely different. Obviously, smaller time scale, the numbers will fluctuate, right? The numbers will fluctuate. But at the end of the day, based on my assumptions right here, not financial advice, obviously, this is looking like an amazing buy once again. So that's just my 2 cents, guys, on these two companies. Let me know what you guys think. Are you excited? Obviously, by the time you guys see this video, the earnings would already come out. I'll probably release this before the earnings come out, honestly. I'll probably release it around like 8 a.m. or something like that. But regardless, I really am curious to see what you guys think about these two companies. I know they're especially, I mean, both of them are riddled with controversy. But let me know what you guys think, right? Let me know what you guys think. And with that, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm here, guys, on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you're joining us on the Discord, the link to this in the description below. So with that said, guys, peace out and have a blessed day.